Hey everybody, it is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, April 15th, 2020. We again find ourselves in the final hour of the trading day. I mention this each day, but in my opinion, at least for me, the most valid time of the price, or the most valid time of the day to make my buying and selling decisions is in the last hour of the day, and particularly in the last few minutes of the day. I say this because during the day traders and the algorithms are controlling the price of the market. They're controlling what's going on. At the end of the day, you have the large financial institutions come in. They're dealing with size, or in other words, they are dealing with a lot of money. They're putting money to work, buying or selling, and they take control away at the end of the day of the pricing from the day traders and the algorithms. So they are dealing with the most money. They have very smart people. They have the best technology, best information. And so I prefer to piggyback my decisions based upon what the large financial institutions are doing at the end of the day. That being said, occasionally I do take a day trade if I see something good that sets up, and I've had two really great day trades today, and I'm going to share those with you when we go through and take a look at my positions. So anyway, thank you all for coming. It's always nice to have you here. I always look forward to it. I'm very grateful that we have such a great group with such good input and insight and comments and poems. And I'm just glad we have this community. So thank you so much for coming every day. I really do look forward to it, and I really appreciate it. So, hey, Dan is here. Good to see you, Dan. Appreciate you coming. Hello, Kamal. Kamal and I just got done chatting over Skype. So glad we got that taken care of. Mount Doji is here. Hey, Mount Doji, what's going on, my friend? Always good to see Mount Doji. Mount Doji was one of my first viewers, so I appreciate the loyalty there, bud. And Brian is here. Good to see you, Brian. Really proud of this young man. Brian is, I think, 18, and here he is during the day coming to a live stream about trading and investing. If he were a stock, I'd buy him. And then here's Bob. Hey, Bob, good to see you. Thanks for saying hi, and thanks for coming. All right, well, interesting day today. Earlier we were down, I believe, about 700 points on the Dow. Currently we're down only 333 points, so we've made a nice little comeback, down 1.41%. NASDAQ was down much more earlier in the day. It's currently down 65 points, down about 0.75%, and the S&P down 48 points, down 1.7%. So a little bit of a pullback after the big days we've had the past few days. So, somewhat to be expected. I don't think it has hurt the structures or the credibility of the chart. So anyway, we'll go through that and take a look. So okay, look, here's the plan for today. First of all, we're going to run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at my current positions, talk about when I bought them, why I bought them, what the methodology I was using, what kind of system I was using, what kind of setup I was using to enter the position, and then we'll talk about how I'm going to manage it, going either to the upside or to the downside. Then some of you have been kind enough to share your trades with me. We've got them up on the board, so we're going to go through, take a look at those, see how those are doing. Then we're going to come back. We're going to do a few minutes on trader psychology. Very, very important. I mention this each day, and the reason I beat you over the head with it is so important. But listen, you have to learn how to trade. You have to understand support, resistance, technical levels, entries, exits. You do. But you need to do that so you can develop a plan. But then after developing your plan, then it's a whole nother world. Then you have to start to work on yourself and get to the point where you can actually follow that plan. You can have the best plan in the world, but if you don't follow it, it just doesn't mean anything, right? So if you're finding yourself being impulsive, if you find yourself not following your plan, you've got to work on it. It's a skill you have to develop. You have to develop it just like any other skill. And in my opinion, the best way to do that is positioning size correctly. The lower your position size, the more you'll follow the plan. That's just it. Simple, simple, simple. The smaller your position size, the easier it will be for you to follow your plan. I mean, if you bought one share of Apple, you could probably follow your plan pretty easily. But if you buy 1,000 shares of Apple, those swings with that money, that's going to amplify up your emotions, and it's going to cause you probably to get out before you're supposed to the upside, and get out before you're supposed to the downside. So the key is finding that dollar amount, that share size amount where it's still meaningful, but you're still able to follow your plan. And that's different for everyone. So that's kind of a personalized thing. But I was thinking about it last night. You really need to find that sweet spot, that really just find that sweet spot where it's meaningful, but you can still follow the plan. And if that's 2 shares of Apple, then that's perfect. That's where you should be. And then you can get used to it, get acclimatized to it. Then maybe you can bump it up to 3 shares and you're still good with 3 shares. So anyway, just a suggestion, but it is very important to follow your plan. So we're going to talk about trading psychology. After that, we are going to go down through my watch list. I have 3 requirements whenever I look to enter a trade. First requirement, I have to have a confluence or a combination of indicators lining up. I look at each indicator as a group of buyers. And you'll put yourself in a position to have a much better chance and improve your odds dramatically if you are in the company with as many other buyers as possible. So if one indicator represents one group of buyers, another indicator represents another group, and then you have another indicator that represents another group, that's 3 groups of buyers coming in. And remember what I just said, the more buyers, the better. So easy way to say it, I look for a confluence or a combination of buyers, or a confluence or a combination of indicators is a different way to look at it. Number 2, you have to have a good risk to reward ratio. Now this is subjective, it's not one size fit all, but you have to get something where you're comfortable with risking $100 to make $200. And what are you going to decide to the upside? What is too high? Well, that's subjective. There's different ways to approach it, but just find something where you go, okay, this looks like a decent profit target, and this looks like a decent support level here. And okay, the way that I view it is that I have more room to the upside and the downside, at least by 2. Even 3 or 4 is even better. And then third requirement, make sure you do not have too many correlated positions. I prefer not to take too many positions in one particular day, and then you have to look at your account heat. And what I mean by account heat is how much of your money do you actually have at risk? And for me, maximum I'll ever put at risk is 60%, which I'll tell you what, this year saved me tens of thousands of dollars, just that one little rule. So we're going to go down through. I'll mark a couple potentials, and then as we get closer to the close, I'll take a look at those candidates and I'll try to whittle them down, try to get the best trade of the day. Really, the more I think about it, the more I like the idea of just one trade a day. Not that I won't take more than one, but ideally, in a perfect world, I like the idea of narrowing down the candidates, looking at them, how do they stack up, who has the most indicators, who has the, which stock or which position looks best, not just on one time, but on maybe 2 time frames, maybe 3 time frames, taking that trade at the end of the day. Then after the market closes, if anybody has any questions for me, please go ahead, just let me know. I'm happy to answer them, happy to clarify anything. If you have any comments, great to hear your comments. If you'd like me to take a look at any stock symbols, I'm happy to give you my opinion. And that's after the market closes. But if you have a stock symbol that you would like me to look at before the market closes, and you think it would be helpful for the group or helpful for you, and you like my opinion on it, please just put a star by it, and then that way I'll know it's time sensitive. So, all right, well, that's the plan. So listen, hang tight, and I will be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Okay, thanks for holding with me. Hey, Frank, good to see you. Frank says, hello, Greg and friends. Kamal, BA And MTCH. Oh, interesting, Kamal. I just took a trade on BA, an intraday trade. I'm going to show that to you in a minute. So I will definitely go over those. Christopher hits you. And hi, Christopher. Good to see you, my friend. Thanks for coming all the way from England today. Hope you're having a nice evening. David, I got to say thank you to David today. David is the reason I took a trade today, and I'll show that to you. But you remember, David, when you were asking me about volatility and how to increase your position size, and so I did that video for you today. So when I was going through today, I saw Boeing, and I was like, oh, this is a perfect example for me to point out to David. Then that's the only reason I looked at it, and I was like, oh, okay, there's possible entry here. Then I looked and I saw that there was a good intraday entry and had a monster trade on it. So anyway, I will show you what I was going to show you, but it's because of you, David, that I was even messing around with Boeing and took this great day trade. And I might take another trade at the end of the day, depending how it closes. Hey, Marco, good to see you. Appreciate you being here from Slovenia. Hope you're having a nice evening. Always nice to have you here. Hey, Steve Burns, nice to see you, Steve. Always an honor and a privilege to have Steve Burns in here. I mean, I'll tell you what. It's really cool to have Steve in here. I mean, to be able to chat with him in the live stream, I'm very thankful for that, Steve, for my sake and for everyone else's sake. So Steve has some good trades going on. We're going to go through those in a second. Scatty13, hello all. Hello, nice to see you. Okay, well, let's get going. And all right, so David, pay particular attention here. So, well, let me start out this way. So Boeing is one of these stocks that has huge range, right? And normally I take a 10% position size. My maximum stock is 5%. But I want to show you here on Boeing. See, the average true range here is 1965. Well, this is close here. Well, the average true range, I mean, what this is expected to move on any one day is 8.57%. So if I use a 5% position emergency stop, I'm not placing my stop outside of the noise. It's very likely it's going to be hit, right? I want to put my emergency stops outside of noise, only if it moves more than it's supposed to, so that I totally know I'm wrong. So from that video I showed you, I was looking, I was like, oh, okay, it was earlier before it had triggered, but I was like, oh, this is a nice high or low V1 here. Well, so what I did was I would take my maximum loss. I would divide two ATRs. Well, two ATRs is from here to here. That's definitely outside of noise. But remember, a standard 5% emergency stop would keep me in noise. So what I would do is I would take my maximum loss that I would take on a trade. Let's say you have $100,000, you're risking 1%. I would take $1,000, divide this into it, 39.29, and that's going to show you how many shares you're going to buy. Now, my maximum stop here, 2 ATRs, is about 16.9%. So, right, I have lots of room. Now, because I'm using 2 ATRs, my position size is going to be much smaller. But I guess the main takeaway here is that if I use a 5% emergency stock on a stock like Boeing, well, look, it's expected to move 8.57% per day. So a 5% emergency stop means nothing, right? So on this particular trade, if I take this today, I'm going to position size it based upon the 2 ATRs, giving myself 16.9% emergency stop. That's a big stop percentage wise, right? But it's only 2 ATRs because it's so volatile. So anyway, I hope that makes sense. So I was looking at that and I was like, oh, this is good. I'm going to show David. And I was like, ooh, this V1 looks like a higher low V1. We close below the 1 ATR channel. We come into the value zone. We pull back. Oh, we got a new group of buyers. But so I saw that happening, but it hadn't triggered. And what I did, I was looking at the 39-minute bar here, and I saw it go under the 200, under the third ATR channel. Then on this particular bar, it closed both above the 200 and the 5-day moving average. And I said, look, I'm going to take this trade. I will day trade it. I'll get out when I'm supposed to get out. But If at the end of the day it doesn't give me any sell signals, then I will transfer into a higher low V1. Well, I did get out here at 146.90 when we rejected the 50-day moving average. But look at this trade. This was a 6.79% trade intraday in just a couple hours. So I did get out. Looks like that was the right place to get out. But I'm going to transfer and rotate into a trade on the daily if today closes above yesterday's close, right? We washed it out. We reversed back up. Looks like we're over the 10 and the 5. So anyway, I will switch from the day trade that I took, the close over the 200. And this was a monster. Holy smokes. I haven't had this kind of monster trade in a long time on the intraday. But so I got out, very nice profit. Like I said, almost 6 point something percent. But I will re-enter this trade again today at the end of the day if this V1 triggers. So anyway, I hope that makes sense. All right, another day trade. I was sharing this with Kamal earlier in the day. This is 5-minute chart on Apple. I took this V2. See how we came down. We went below the one ATR channel and then rallied back above. At the same time, we triggered a V2. Here's day 1, day 2. Day 2 washes out day 1, day 3. Closed above day 1's close. I bought it here at 282.71. It moved up. It moved up. It moved up. Then it rejected the 50-day. And I was like, oh, I guess I got to get out with the 50-day. But then I realized on the same bar that it rejected the 50-day, we had the 520 crossover. So I transferred my trade from this V1. Normally I would have gotten out here with the rejection of the 50, but then the 5 crossed over the 20. And so I transferred into this trade, the crossover trade, and it kept going up. I was glad and happy that I did. And then when we rejected the third ATR channel, that's where I got out. So I got in at 282.71 and I got out at 285.26. So two really nice day trades there. One for 6 point something percent, and this one was almost 1%. So anyway, that was really nice trade. And then I also have a long-term call on Apple that I bought back here a few weeks ago. They're $250 calls expiring in June of 2021. Right now it's at 285.40, so the calls are in the money a lot. They're in the money by $35. So anyway, Apple's been treating me pretty well there today. So I'm out of the day trade, just sticking with the calls. My plan on the calls here is if we reject the one ATR channel on the weekly, that's where I'll take my profits. If it comes back all the way down here, closes below halfway of this washout bar that created this V1 here, I will get out there. But anyway, so far Apple's treating me really good and really great day today so far. Google. So I did buy Google back here on the 8th of April. I bought it when we had the 520 crossover. This is a good back-tested approach for Google. Bought it here 1206.49. Moved sideways. Yesterday had a huge move up. I got rid of half of my position yesterday when it rejected the 200-day moving average. And there's quite a lot of resistance stuff going on here. We have a 50-day moving average, downward sloping. We have the third ATR. So I'm going to stick with this for now. If we get another big rejection of the 200, I'll probably just take it off. Otherwise, I'll just continue to use this as a crossover trade as long as the 5 stays above the 20. So that was down quite substantially earlier, and now it's rallied nicely. So anyway, really good. The only stinker on the day was the overnight SPY trade. I'm going to go over this real quick in case we have some new viewers. I do buy the SPY every day at the close. I hold it overnight. I sell it first thing the next morning. This is based on a long-term back test from Liz Ann Saunders at Bespoke Invest. Since 1993, they tested 2 approaches. Approach number 1 was buying the SPY at the open, holding it through the day, closing it out at the end of the day. But if you use this approach every day since 1993, you've actually returned 13.9% for all your work. However, if you did the opposite, which is what I do, buy the SPY at the close, hold it overnight, take that overnight risk, sell it first thing at the morning, this approach actually returns 634.2%. So a negative 13.9 compared to a 634.2. I'd rather allocate money towards something that has a good back tested record. You can see the equity curve over time has just gone up and up and up and up and up. But there are drawdowns with this approach. 2019 was a fantastic year for this approach. 2020 been really bad. So I position size small so I can withstand the ups and the downs, but this is a long-term approach for me. So I did buy SPY yesterday, 283.79, sold it first thing this morning, 277.52. So got whooped up on there pretty good. Yes, 2 days ago we bought here, sold at the open, had a great day yesterday, and then gave a lot of it back today. But you know, this is just one tool in my tool bag of trading. Some are longer term, some are shorter term, some are overnight trades like this one. So I will be buying SPY right here at the close. Okay. Let's take a look here. Steve Burns, first on deck, bought the Qs, bought them back here about 196.30 when we had the 520 EMA crossover. Back test well. Nice thing about these crossovers is that if you're wrong, it tends to get you out pretty quickly. If you're right, you can stay in it a long time if it starts to trend. So move sideways, kind of sideways. Next day it took off. Yesterday had a big day up. I imagine Steve's looking for a rejection of the 70 RSI. Today it was down much more earlier, but it's down a little bit today. It's down 0.8%. But anyway, it's still above the 5, still above the 20. So I imagine Steve's just still going to keep it. Alibaba breaking, going against the trend today. Great trade. Also bought it with the 520 EMA crossover. Bought it here at 197.80. Same thing, kind of moved sideways. Yesterday we had a big day up, closed off of its highs. Today we went down and it's up 1.74%. So again, I imagine Steve's looking for the 70 RSI. IBB. Steve bought this here at 109.70. Got a great price on this because it was up higher, then he got it right at the end, but the 5 crossed above the 30. It's moved up just perfectly ever since he bought it, down just a little bit today. AGQ, another great trade by Steve, 520 crossover. Most of these are crossover trades, trend trades. Bought it at 21.20, moved up nicely the next day, then down. Yesterday up huge, and then down today. So this one's been a bit of a bucking bronco here, up and down with pretty big percentage moves. So anyway, he's still looking really good on that one. So if you have any changes on these trades, Steve, let me know. Monster. Okay, here we go. Steve Burns, another 520 EMA cross, bought it here at 60.20. Moved sideways, had a monster day yesterday. I guess that's apropos because it's Monster Beverage. Huge day today, down about 3.28%. Again, he's probably looking for the 70 RSI to the upside or a 520 cross under to get him out. Roku. All right, Steve Burns and Frank and Kamal have this trade. Again, another crossover trade when the 5 crossed over the 20. Bought it at 96.50. Gapped up huge yesterday. Gap down huge this morning and very, very strong reverse back up 5.92% today. So congratulations, you guys. What a monster trade and pretty simple entry, right? Just the 5 over the 20. All right, lastly, Steve Burns on QLD. This is double leveraged Qs. Steve bought this yesterday with a close over the 200-day moving average. This is good back test on QLD. Gap down, but now, well, it is down 1.47%, but it looks like it might be holding. It is holding the 200-day moving average, and I believe that is Steve's line in the sand. I don't want to speak for him, but I would imagine if it's different than what I said, Steve, just let me know. But currently, it looks like it is holding above the 200-day moving average. Okay, so that is it. So great trades, everybody. Really, really nice trades. Zach is here. Hey, Zach. Nice to see you, my friend. Appreciate you coming by. Hey, Frank. Frank's got a poem for us. Let me see if I can not butcher this one. Don't get trapped by routine. Learning means trying things and being open to what you haven't seen. Think outside the box. Think outside the box and open a lock, because you can't grow if you don't know, especially when it comes to a stock. Very nice. Let me try. Don't get trapped by routine. Learning means trying and being open to what you haven't seen. Think outside the box and open a lock, because you can't grow if you don't know, especially when it comes to stock. Bravo, Frank. Thank you, sir. I really always appreciate the time and effort that you put into these poems. It seems like one of the hardest things in the world. I couldn't write a poem if I had 3 years, and Frank can just bust them out. So that's, a nice skill, a nice gift that you have. But thank you, Frank. Hey, Boston's here. Good to see you. Hello, hello. Appreciate you coming. David says, wow, I'm so happy that question helped somehow. I will show this to my daughter. She is so excited when you say hi. Oh, we'll tell her hi. But yes, that was a monster trade, David. I would not have taken it if it wasn't for you. Honestly, because I was like, oh, this is a good example for Dave. Frank says, congrats, Greg. Love it. Thank you. Steve is the eye of the tiger. He is. Can you hear the music in the background? Steve says, I'm selling AGQ today due to the range and volatility. I am adding Google after the 530 SMA crossover. Okay, so good trade on silver. Yeah, it's gotten a little crazy, hasn't it? So let's take silver off then. And then Steve will be adding I've got it right here. I knew you were going to be looking at it. We have a 1030 crossover, simple moving average crossover on Google. And this is a good back-tested moving average crossover for Google. Obviously it doesn't always win, but again, with these crossovers, you have bigger wins, and you have a lot of small losses, and you have some big monster wins. So that's really the advantage of using crossovers. So I will put you down, Steve, at the close here for this approach. You know me, sometimes Steve and I trade a little bit differently. I like the crossovers, but I just have my own preferences as far as what I consider to be limits to what I can buy. And right or wrong, sometimes it's going to work, sometimes it's not. But right now it's above the second ATR channel, and that's just a filter. That's just a rule that I have. Doesn't mean it can't go up, right? But just my preference is when it's above the second ATR channel, I have to pass on the crossover. But listen, I've passed on a bunch of crossovers lately for that reason, and I didn't get in, and they've gone up. So that's how it goes. And then there'll be other times where I will pass on a trade because it's above a certain level, and it will go back down, and then I'll be glad that I didn't take it. So that's trading, right? You're always disappointed if you follow your rules or if you break your rules. That's why this game is so tough. But okay, sounds good, bud, and hope that goes well for you. Okay, Steve. Zach says, Steve, when you take your trades, do you wait till the end of the day as well, or are you making them as soon as you cross? I think I can answer that for you, Zach. Steve waits till the end of the day. Unless you've changed, Steve. Unless you've changed. But my understanding is that, but maybe I'll just let him answer for himself. David says, are the 5 and the 30 simples? Yes, on this particular trade. Oh, wait. Oh, is it the 530, Steve? Why do I have the 1030? Just to confirm, Steve, is that 530 or 1030? I don't know why I have 1030 on my on my charts because the 10 is crossing the 30 today. But yeah, David, they're simple in this particular one. Steve says, you're correct. I use end of day signals 99% of the time. And Steve, just to confirm, if you're listening on that crossover on Google, I've always had it set up as a 1030 SMA cross, which is happening today. And you said 530. Is that just a mistake, the 530, or did you mean 1030? Okay. So listen, before we go through my watch list, before we look for my 3 requirements at the end of the day to take a potential trade, which again are confluence or combination of signals, good risk to reward ratio, not too much correlation, not too much count heat, right? Those are the 3 requirements. But before we go through, look for candidates for the end of the day trade. I do like to talk about trader psychology. There's some really good channels out there on Facebook and Twitter. I spend a lot of time and effort posting, good trading words of wisdom, good insights and comments on trader psychology. And really one of the best ones out there is Trading Composure on Twitter, at Trading Composure. It's a really good channel. He has a lot of followers, and for a good reason. He puts out really good, deep, insightful posts every day about the importance of trader psychology. So I always look forward to his. But this one is pretty simple. One good trade at a time. That should be your number one goal. And, there's a book, I would recommend reading this book. It's called One Good Trade. And it's by Mike Bellafiore. He's a pretty famous guy, runs a prop trading firm in New York City. Really interesting book about all the different traders there, their personalities and so forth. But when they teach their Ivy League graduates that come in to apply, what they teach them about trading is one good trade at a time. Look for the best trade. And I couldn't agree more. And, for me, what is a good trade? Well, a good trade is one that has a confluence or a combination of indicators lining up, that has a very clear stop loss, a meaningful, clear stop loss with real valid support underneath it. What's your, ultimate profit target, or your reward to the upside? Something that's very clean, like a 200-day moving average above you, something like that, right? Looks good on multiple time frames. But that's why, I go through the watch list. I try to get some candidates, and I just try to narrow it down and narrow it down and narrow it down and narrow it down to the end of the day. And ultimately just take that one good trade that has a clean chart. Everything looks good on multiple time frames. It's a definitive stop, legitimate place. I have a very clear profit target above me. And so that's what I consider a good trade. But whatever you consider a good trade, just narrow it down and pick the best one of the day. So one good trade at a time. That should be your number one goal. So anyway, thank you, Trading Composure. I found that helpful, and I hope that helps everyone as well. Okay. Let's see, what am I doing? Kamal says, Greg, it's 10:30 in your crossover list. Steve says, you're right, Greg, it's the 10:30. Okay, good. That scared me there for a minute that I had the wrong chart up. So yeah, that does make sense. That does make sense. So yeah, there's the 10:30 right there and then. Okay. Let me take a quick look at current positions. Okay, well, it looks like that was the right exit on Boeing. But again, here, let me get rid of these entries and exits here. So I will be buy Boeing, not an intraday trade, but a regular trade if today closes above day one's close. We closed below the -1 ATR channel. We rallied up into the value zone. People that bought here probably sold here. This is what moved it down. We had a new group of buyers coming in today. We rejected yesterday's low and reversed back up. That's a false breakout. That's what I call a V1 or a V2. So as long as today closes above yesterday's close, I will go ahead and buy this. And thanks again, David. That was a fantastic intraday trade. Holy smokes. Like I took it, I left the computer for a minute, I came back and went, what? This is fantastic. So again, I will be buying this today. Because it has a large range, normal range each day. Remember, the average true range on this, meaning what you expect it to do in any one day is move around 8%. That's a big move, right? So using the 2 ATR, dividing it into your maximum loss accounts for all that and gives you space to let it move around during the day without having to lose too much. So, I mean, the amount of position size that I would buy on here is about only 25% of what I normally would. So it would be like taking a 2.5% position size. And my emergency stop is way down here, 16.9% down. Certainly hope I don't hit it. If I buy it today and then it closes below today's washout bar, that will be my end of day stop. But you always have to have an end of day stop and an emergency stop, but you have to account for volatility in that. So anyway, I hope that makes sense, Dave. Apple. Okay, so again, had the really good intraday trade on that. So let me take these lines off here. But I still have the long-term calls on this that I bought back here a few weeks ago. So that one doesn't have to be monitored very much. Google took the 520 crossover, moved up, rejected the 200-day yesterday, so I took half the position off. Felt pretty good about that. Going forward here, if the 5 crosses back below the 20, that will be a reason to get out. If it rejects the 200 again in a significant way, I'll probably get out. But pressure's off because I've scaled out. Then I took a half of what I had left, so I don't have a whole lot left, which is what I was telling you about before. When your position size small, you can let things breathe a little bit. Zach says, Steve, not sure if I mentioned it yet or not, but I just got your Options 101 book for my birthday this weekend, and I can't wait to dive into it. Oh, great, Zach. I'm so glad. It's one of my favorite options books. Really is. It really is. I've read that a bunch of times. So thank you, Steve, for putting out such good content. All right, let's take a look-see. All right, well, I guess it's that time to go down and take a look. Okay, Apple, we just looked at that. No new entries for me here today other than that day trade. At this point, and of course I have the long-term calls on this, but at this point it's just up here at the third ATR channel. 92% of prices tend to fail here. I'm waiting for a pullback into value. And look right here. Here's the 200-day, right in the middle of the value zone. Right here is where I would be licking my chops for a good risk to reward ratio, but nothing today. Adobe is down today. Don't see anything worthwhile here. Pull back into the value zone at the 200. This would be a good place to look again. Amazon will not be stopped. Amazon will not be stopped at all. Look at this monster trade. My gosh, we're down 437 points on the Dow, and this is still up. This is unbelievable. We have earnings coming out. I imagine people just think Amazon's earnings are just going to be completely outstanding. Then they probably are. But anyway, can't get involved up here on Amazon. Boeing case, we just talked about Boeing. If this V1 triggers at the end of the day, I am in, baby. Berkshire Hathaway, chopping around here. Come back into the value zone, sideways move, V1, V2, that's where I'd get interested. Beyond Meat, nope. Need to pull back into value before I would get interested in that. When I say pull back into value, what I mean is a reversion to the mean. Up here, I don't want to buy Caterpillar up here. It's too extended. Now we're back in value. Does it mean I want to buy it right away? No, but it has fulfilled two requirements. One being above the 1 ATR channel, and then 2 coming back into it. Now I need to see it go sideways, look for V1, V2. Carnival Cruise Line. Oh boy, this is the regretful trade. I was going to buy it here. We had this beautiful double bottom with a bullish divergence. Red, green, no red. That's the signal. But my trigger was right here. Should have been right here, but I couldn't get it. It didn't go under 30, over 30. Look at this monster trade I missed. But that's how it goes. The Dow, again, we're over the 1 ATR channel. I need a reversion to the mean. I need a pullback into value. I don't like to buy overvalued. I want to buy in value or under value. Walt Disney down. Yeah, we talked about that yesterday. It triggered that V2, but the V2 was too high. I remember that, Kamal. So, you know, pullback into value is what I'm looking for. Etsy hanging in there, just too high. Facebook got close to that downward sloping 50-day. Still can't get interested here. Need a pullback into value. Gold down a little bit today. I actually did buy gold here when we had the 520 crossover. It went down. I had to exit half my position because it closed under both the 5 and the 20, but I kept my other half and it rocketed up. I was really glad I kept that other half. I got out yesterday on this bar. We got kind of close to the 70 and I didn't like to look at this bar, so I exited profits there. Google, I still have. I took it with the 520 crossover. Took half yesterday when I rejected the 200-day moving average from above. Moving forward, I just have to see how this one goes. Possibly a close below the previous day's low, or a bearish reversal bar up here, or rejection of the 50, something like that. We'll just have to see how it goes. Goldman Sachs, boy, look at that one. Steve had a great trade on Goldman Sachs from here up to here, and then he got out here with a slight profit, but he had to get out before earnings, right? Steve doesn't hold through earnings, either do I. Gap down this morning big time and then reverse back up. So I guess that's a good sign that it was able to go green after bad earnings. Home Depot, don't see anything there. Look for return to value. IBB, Steve has that trade on the 530 crossover. Got pretty close up here to the third ATR channel. It's tough to get above that third ATR channel historically. And down a bit today, but still nice profitable trade. Intel chopping around. Back down into the value zone at the 200 would make way more sense than where it is today. IWM down big today, down 4.37%. So I have a friend that has some puts on the Russell, so he's having a good day. Johnson & Johnson, just too high. CarMax down 4% today. Again, above the 1 ATR channel. Stocks like to go back to their mean. They like to go home. Right, like Frank said. So, you know, back here in the value zone, see the low, see the high, 50% retracement would be right about here. It'd be smack dab in the value zone. So that's where I would be looking on CarMax. Coca-Cola down slightly today. I don't see anything there. Lockheed Martin rejected the 200. I don't see anything there. MasterCard down substantially today. Look at this. Just pegged that 200-day moving average, and sellers came in. For me, pull back into value, sideways motion, V1, V2. McDonald's down pretty significantly today. I don't see anything there. Merck, boy, it's tested that 200. 1, 2, 3, 4 times. So I imagine at some point it's going to give up and go down, or it's going to be strong enough and blast right back above. Microsoft down a little bit today. Netflix will not be stopped either. Netflix and Amazon. Look at this. Look at this nice sideways motion and then the explosion outside of it. So looks like it rejected the 70 RSI today already. So had I been in this trade, I would be getting out today because it tested the 70 intraday and looks like it's going to close below. Nike, I don't see anything there. Philip Morris got close to that 200, but pull back into value. PayPal down a bit today, just too extended. The Qs, you know, yesterday it closed above the third ATR channel, which is very strong, but now it's underneath it. So for me to get involved in the Qs, you guessed it, maybe a test of the 200-day moving average. That might be interesting, depending on what the price action is, or pull back all the way into the value zone. Silver down a bit today. SPY guy got whooped up on that one, but you know, yesterday I was going over Steve's trades, and he had every single one of them was green, except for one. There's always that one, and today it was for me. Had all positive trades, except for this one right here, the old overnight SPY trade. But we're tight. That overnight SPY trade and myself are tight, so we're sticking through it. Whoa, look at Teladoc today, up 9%. Holy smokes. Boy, it came into the value zone, had that V2, which was nice. I was waiting for a pullback into value, but I didn't get any sideways motion, darn it. And it took off without me. Bonds caught a bid today, didn't they? Gapped up quite a bit. Tesla up 2.57%. Boy, it's been all about Amazon and Netflix and Tesla lately. Twitter, no. UAL, looking for a higher low V1 similar to Amazon. Your natural gas, nothing here, but look, see this low? See how deep the MACD bars are? See how we have this nice rally? Now we're coming all the way back down. If we can test this low, we're going to have a beautiful double bottom with the bullish divergence. So, you know, nothing to do yet, but if it comes back down, test that low, has a V1, V2, or a false breakout to the downside at the same time, we have a bullish divergence. That's where I would be looking. So nothing on UNG, but in the future looks pretty good, potentially. United Healthcare Group, just rocking along, but too high for me. Oil, same with oil, right? We have a low, we have a rally, we go from red on the MACD to green on the MACD. If we come back down, test this low, we'll have a beautiful double bottom with the bullish divergence, and I would be interested in taking a long position there. VIX, whew, VIX is finally up. Bruce and I were discussing VIX the other day, yesterday as a matter of fact, and he says, you've been looking at VIX. I'm like, yeah, but I didn't see any signals yet on VIX. Could possibly have a V2 here today, but it's outside of the value zone, and we had this huge gap, which doesn't allow me to buy it. Verizon, nope. Walgreens, V2 to the downside. Day 1, day 2, day 3. Day 2 washes out day 1, day 3. Closing below day 1's close, but I'm not going to short that. Walmart is down just a smidge. Energy, I've had this nice run up. Now we're pulling back into the value zone. So I'm looking for a pullback into the value zone. XLF, pull back into the value zone. Real estate, same, pull back into the value zone. Utilities, pull back into the value zone. Healthcare, too extended. Zoom, whoa, look at that. So for me, everybody, I'm not going to take the 530 or the 1030 crossover on Google. It does backtest well, but just my own preference of being above the 2 ATR channel, that's kind of my line in the sand. But anyway, it is a good backtested approach. So if anybody takes that, good luck. I hope that works out well. So really the only thing I see today, which is kind of how I like it, is the Boeing trade. I will buy Boeing today with this higher low V1. We came below the 1 ATR channel into the value zone, pulled back, washed out yesterday's bar, closed above. So I will be buying Boeing at the end of the day. Okay. Now, I know somebody wanted me to take a look at some things. Okay, so BA, come on, we looked at BA already. Let's look at your other one. MTCH. Match. Well, listen, from a risk to reward standpoint, Kamal, sure. I mean, you know, closes over the 200-day. If it closes under, you just get out. But you know what I'm going to say, right? For me, it's a little too far extended. We're above the second ATR channel, but that's just me. That doesn't mean, you know, you guys have to do what I do. That's just a preference. Many times it costs me potential profits by using that filter, right? And many times it saves me. And so it all works out. But for me personally, Kamal, it's a little high in this channel. I mean, we're closer to the third ATR channel than we are any other channel, right? So for me, that doesn't mean it doesn't. And RSI 62, it's a little high. So that's my opinion, Kamal. Steve says, that's great. Bing He says, hi, Greg. Can you look at EVBG? EVBG. Yeah. Now, I don't know how. I highly doubt this is in ETF replay. Unless they're well-known stocks, I can't do the back test. Well, you know what? I think we've got enough time. Let me quickly. I'll be very surprised if this is in here. EVBG. Yep, it's not available. So I don't know how that back test Bing He. So I'm a little hesitant to, but any crossover is better than no crossover. It's over the 50 RSI. MACD looks close to crossing. Doesn't look. Let's look at the weekly Bing He. Bing He, look at the weekly. I mean, it's okay. I mean, there's nothing. I don't see anything great here other than the V2. See the V2? Here's bar 1. Bar 2 washes out bar 1. Bar 3 closes above day 1's close, or so far anyway. So, anytime you have a V1 or a V2, it's better than not. So that is somewhat positive on the week. The takeaway is it's a little high. You're from the weekly, you're just a touch high. And then what is going to be your stop, Bing He? Is your stop going to be with the 5 crosses under the 20 or close below the low here? And do you have enough to the upside to make it worth the risk to rewards? So I don't know. Without knowing the crossover back test, it would concern me. So anyway, sorry. I wish I could be more helpful, Bing He, but that's kind of my take. Yeah, happy birthday, Zach. Happy birthday, CJ Biz. Hey, CJ Biz, for options, is there a time and delta minimum for overnight SPY bullish trade? I don't trade options overnight with this approach, CJ. I don't know what the back tests are. I'm not saying it wouldn't work. I'm just concerned that the time decay of the options would work against you. As far as a delta minimum or something like that, if I did it, but again, I won't do it because I don't know what the back tests are, but I would imagine like an at the money is probably what I would use. And as far as the delta minimum, well, the deltas at the monies are probably going to be 45 or 55, 50, somewhere in there. But again, I've not seen back tested approaches with buying options on this overnight SPY trade. Happy birthday. Christopher said, where were you thinking your stop on BA? Well, I know exactly where my stop on BA would be. So, and again, talking about a clean chart, right? Here's day 1, day 2. Day 2 washes out day 1. If it closes above day 1's close, then this is the washout bar. From a Fibonacci standpoint, my stop would be a close below basically today's bar going forward in the future. Right? So right about there, I guess that's close to halfway. So yeah, if I buy it today at the close, if it closes, my emergency stop will be down here, 2 ATRs away, and I'll position size to that effect. If we close below the previous, or if we close below halfway of today's washout bar, that will be my stop, giving me theoretically a small stop and giving me theoretically a big win. And that's what's important in trading. Hope that helps, Zach. ISRG. So, Kamal, right? Yeah, the V1. Technically, it's a higher low V1, but it's above the 1 ATR channel. You've got the downward sloping 50-day moving average. It's not in the value zone, and you have earnings coming up. So, oh yeah, scratch earnings tomorrow. Yeah, I didn't see that. Christopher, but I wouldn't take that trade regardless. Christopher says, Bing He, what's your exit condition for the back test as Trend Spider has this symbol? Oh, interesting. Thank you, Christopher. Abin Christian, hello, how are you? Nice to have you here. Thank you for coming. Do you have any advice for me, the 14-year-old trying to start Forex? Ugh. I liked the sound of that until you said Forex. You know, Aban, I got to congratulate you at such a young age to be interested in this. You know, Forex and futures is it's the wild, wild west. I mean, it's very risky. My honest advice would be not to get involved at Forex at your age. If I were to get involved with trading, I would trade with stocks. You know, you don't have the leverage. You know, what I would do, Aban, my best advice to you is in my channel, in the description below, I have my recommended reading list of my favorite trading books. And you'll see the majority of them are from Steve Burns, but there's a book there and there's a link to it. It's called Moving Averages 101. And my advice, Aban, would be to read that book before you do anything. I have a bunch of videos, lessons on my channel that they're free that, I would recommend reading those books, watching those lessons. And then after that, let me know how you feel and maybe I can give you some advice going forward. But me personally, I just feel like starting Forex would be a bad idea, but that's just me. But thanks for saying hi. Christopher says, Abon Christian, read Steve books. There's a good starter for beginning traders. 100%. I agree. Mount Doji, thoughts on PD? Oh, I'm running out of time. The V1's too high. Those are my thoughts. All right. Sorry, Mount Doji, but yeah, it's too high for me. I'm running out of time here, so I'm going to have to make these trades. And I have to make them in a couple of accounts. So I'm just going to go ahead. There's one. And there's two. All right, so I bought Boeing, this higher low V1 in the value zone. Google, I'm just going to keep. I have such a small position, and I took it using the 520 crossover. So I think Steve's going to be getting out of the queues with the close under the 200. He already got rid of silver, had a beautiful trade on that. Man, what a day. What a fantastic day. I'll tell you what. Sometimes I talk smack about day trading, but those two trades today were fantastic. Thanks to David, especially on the Boeing trade. And we'll see if we can turn that Boeing trade into a good trade on the daily charts as well. So, all right. So it looks like SPY that was my one stinker for the day for sure. But I reloaded here at 277.76 for the SPY trade, the overnight SPY trade, and then Boeing. Where did I get filled on Boeing? 145.73. 145.73. Okay. Okay. And again, just the particulars on this trade now. It was a higher low V1. I will get out tomorrow if we close below halfway of today's bar, right? Trying to keep that simple. My emergency stop is 2 ATR channels away. You know, very unlikely that I'll hit that, but if I do, I've position size using the 2 ATR. So I position size pretty small, right? I position size pretty small, but again, we always have an end of day stop and we have an emergency stop, and this emergency stop was based upon position sizing using 2 standard deviations away from the entry. And you know, my profit target on here be the 50-day moving average, the 70 RSI. You know, a rejection of the 3rd ATR channel might be another possibility, or just a rejection of the 50 RSI on the upside. So lots of different variables moving forward. So yeah, fantastic day. Fantastic day. Christopher says, my exit is either closed below both MAs or if 5 crosses under the 20. Okay. That was, what stock was that again, being EVBG. EVBG. My exit is closed below both MAs, okay, or the 5 crossing under the 20. Yeah. Well, the only way to decide, you know, if that makes sense, risk to reward raise, it's very difficult. I mean, if you say, hey, this is my profit target up here, yeah, then it does make sense. But what are the chances it's going to get there? I don't know. That's a tough one. That's a tough one. It feels a little chasey to me, but that's just me. I could be completely wrong, Bing He. Oh, okay. Bing He got it. EVBG. Bing He is back on the board at 11151. All right. Hey, listen, if you have any more comments or questions, anything I can help you with, please let me know. But before that, I just need to do my quick little plug each day and let everybody know that I do offer private one-on-one coaching and teaching and mentoring lessons in the evening time via Skype. I love to teach. I've had really good success with my clients. I believe really the best way to learn trading is one-on-one. And that is why I have this course. So it's 5 sessions. Each session is anywhere between 2 hours and 3 hours. It's usually 3 hours. So, you know, it's an intensive course. I teach you everything I've learned over the last 24 years being a full-time trader, teaching you everything I've learned from all my mentors like Stephen Burns and Dr. Alexander Elder, Kerry Lavorne, Larry Williams, all the things I developed myself. But you know, the course is $1,000, but I think it's worth every penny. I really do. I think you're going to leave that course having a much better understanding of all aspects of trading. And just to give you kind of an idea of the format, you know, each session I have a lesson, I teach it to you. Then the second half of the lesson is spent by you teaching it back to me asking you questions, the two of us looking at charts, going through charts. Is there a trade here? Is there not a trade? If so, why? If not, why? What's the risk to reward ratio? What are the pluses and the minuses? Just lots of practical experience with going through many charts. And like I said, in my experience, the very best way is to learn one-on-one. I don't care if you're learning the guitar or learning how to trade or whatever. But one-on-one teaching to me is very valuable, and that's why it's more expensive, right? I don't teach you anything in the course that I don't teach here. It's just the it's just the attention that you get because it's just one person and we can communicate right back and forth. So if you're interested, I really do think it's worth the money. I think you'll be very happy that you took it. Before I take on a new student, I like to have a Skype call with them just so I can ask them some questions, about their trading experience and their challenges and their goals in trading. It's a good time for you to ask me about the course and any questions that you have about me. The call's free, the Skype call's free, and I promise you, I 100% promise you, there's no pressure or obligation to have this Skype call. I am totally not like that. I hate it when people are like that with me. So, it's basically just a free call just to see if, we would be a good fit as far as student or teacher. So if you'd like to have that call, the Skype call, just reach out to me. My email's in the description of this video, and then you can also contact me on Twitter, and it would be nice to put a face with your name. And so if you're interested, please reach out. And then also, if you like today's content, if you find this channel helpful, I'm really glad, but all that I would ask is that you would hit the thumbs up button. It helps grow the channel. There's a lot of people out there that need help with trading, a lot of people that are lost in a bad spot with trading. I think if we could get them to the channel, that we could, hopefully teach them some good trading principles to hopefully make some money, or at the very least lose less money. So there's a lot of people out there that need help with trading. And so if you could hit the thumbs up button, it would help build the channel and help promote it more. So I would really appreciate that. Okay, that's my plug. Thanks for sticking through it with me. So being he is long, congratulations. Glenn says, hey Glenn, good to see you, bud. Glenn says, long Q, short IWM is the way I am looking. Well, that makes sense, right? That's the hedge fund way. If you've heard of hedge funds got that name because they would buy the strongest stock and they would short the weakest stock. If Chevrolet was the strong stock and Ford was the weak stock, they'd buy GM and they'd short the weak stock. And that's exactly what the approach Glenn's using, right? Glenn, I think I'm correct. He's buying the Qs, which is the strongest index, and he's shorting the IWM. Yeah, sounds like a good plan. Glenn says, IWM rejected the back test at 125. Let's take a look. Yeah, rejected 125 a couple times. Implied move would see it fall to 80. Ouch, that's a 30% downside risk. Well, like I said, I manage an account where we do have puts on IWM. So person I manage that account for would be very excited to see it fall to $80. We bought those puts on IWM, Glenn, at 150. I remember exactly. We broke it back under the 200. We came back up near the 150s. The 250, the 200 above us. I knew that was going to act as resistance. We rejected the 200. We also rejected the third ATR channel. And so this is where we bought the puts and bought a bunch of them. And as it went down, we scaled out, we scaled out, we scaled out, we scaled out. And just have a couple hangers-oners now. Brian, man, that's so cool how a bond is 14 and already has an interest in wanting to learn Forex. I know, Brian, that makes you sound like the old grizzled veteran at 18. Isn't that something? Trying to come in and steal your thunder with the 14-year-old age. But, yeah, that is pretty dang impressive. But again, I don't obviously know a bond situation, Brian, or a bond if you're listening, but Forex, that's a rocky road, man. I mean, that's I don't know. Maybe it would be, maybe he'd be a great Forex trader. It's hard to ever know, but I think you need to walk before you run, crawl before you walk. And I think, trading stocks with a simulation account, not trading real money, would be crawling, and then maybe with real money to walk, and then maybe later on down the line trading futures when you can run. But yeah, maybe you and Brian, or Brian and a Bond would be our two young superstars. That is pretty cool, Bri. Okay. All right. So Steve did sell QLD with a small loss. He took a shot at it. Didn't go, but that's the key to profitable trading, right? Is just having a big win is fine, having a small win is fine, having a break-even trade is fine, and having a small loss, that's fine. Hey, by the way, I did a podcast last night with Famous Dave's on YouTube. That's the channel, Famous Dave's. I don't think it's up yet, but David Lincoln is a friend of mine. He is an ex-trader. He traded on the floor. And he was a floor trader, commodities and trader on the VIX. He's a specialist on the VIX. That's really his niche. And so the channel is Famous Dave's on YouTube. But if you're interested in the VIX and want to understand the VIX more, I would recommend that channel, because that VIX, that's a wild, woolly animal. Hard to understand, all sorts of stuff going on, but he is a specialist in that niche, and he did interview me. I'll share the interview when it comes out, but I am going to interview him on my channel, because I am not an expert in the VIX, and I don't know very many people who are, so I've never interviewed anybody on this channel, but Dave is going to be my first interview, because I think it could be kind of fun to pick his brain, and maybe we can all learn something. Okay. All right. Well, listen, does anybody have any other questions for me? If you do, please let me know. I'm happy to answer them. If you have any comments or observations or jokes or more poems, please let me know. But I'm very grateful to have a wonderful day today, mainly due to the Boeing and the Apple day trades. So that was fantastic. So thanks again, Dave. I gotta really thank Dave. That was fantastic. Fantastic. Sometimes you go out of your way to try to help someone, and you get benefited as well, right? So let's remember that. You know, Christopher, I use etfreplay.com. Let me just put it in here. ETF replay. And then put a .com on there. I would, but Google sometimes gets weird about that. So etfreplay.com. It's really good back testing. Steve turned me on to that years and years ago. The only downside is that it doesn't have a lot of the kind of lesser known stocks. You've seen me run into that issue before, Christopher, where people say, what about this stock? And I put it in, and they don't have it. But for the major ones, yeah, let me find this. Oh man. Oh, give me a sec, everybody. Sorry. There we go. Here we go. That's how he spells it. Famis Dave on YouTube. Really nice guy, a real expert in the VIX. And, it's good to learn about all sorts of other issues with the VIX, especially vis-a-vis what the stock market's doing. So, yeah, we had a great conversation last night, and I'll post that when it comes out. Yep, but not FAMOUS, FAMIS. All right. Well, interesting day. We attempted a rally, but we were still down 444 points on the Dow, 122 on the Nas, and 62 on the S&P. So, just a real quick recap then. Boeing, higher low V1. I like this setup. I like the higher low V1. Again, if it closes below halfway of today's bar, I'm out. I position size all the way down to here for my stop, and the upside will be probably a rejection of the 50 RSI or the third ATR channel or the 70. Google has rejected the 200-day twice here. Probably what I'm going to do is, if we get a close below the previous day's low, I'll get out. And then I took the overnight SPY here at 277.76. So that's that. You're welcome, Kamal. Okay, well, it's raining up here today, wet and muddy. So I guess I'll head on out, go for a hike. Katie's over there sleeping, but she'll be excited to go. And yeah, I appreciate everybody coming today. Again, I really look forward to seeing everybody. If anybody has any last questions, this would be the time to ask me. If not, just let me remind you to please try to go out and do something nice for everybody today, or someone today. Be hard to do it for everybody, but just try to do something nice. Give somebody a call, see how they're doing, see how their day is going. They really might be pleasantly surprised and grateful that you've called just to check up on them, right? So we should try to do something nice every day for somebody. And speaking of another thing to remember, if you haven't hit the thumbs up button before you click out of here, I would appreciate that as well. Pedro, hey, good to see you, Pedro. Pedro says, thank you, Greg, for that valuable insight. Grateful for that. Thank you, Pedro. Grateful for you. Thank you so much for coming. Okay. Well, I guess that's a wrap. Dan says, have a great walk. Stay safe. You too, Dan. Brian says, thanks, Greg. You too, Bri. Brian's our old, grizzled 18-year-old veteran in here now. It's hilarious. Proud of you, Brian. All right. Well, hopefully if you can make it tomorrow, same time, same place, last hour of the market in tomorrow, which is what? Thursday. Yep. All right. Well, take care, everybody. Have a good rest of your day. Be safe. Be nice. Talk to you soon. Bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.